You'll find the link to exchange comparison spreadsheet in the description and pinned in comments below. Most people lose money in crypto for one reason, and almost nobody realizes it until it's too late. It's not bad luck, it's not bad timing, it's manipulation. And today I'm showing you exactly how it works and how to stop it from destroying your portfolio. In the next 30 minutes, you will learn the 5 most dangerous manipulation tactics in crypto, the psychology that makes investors fall for them, and the exact defense system that separates losers from winners. By the end, you will know how to spot manipulation before it steals your money. But here's the trap: one of these tactics is already happening right now, and almost nobody sees it. If you want simple crypto education without the confusing jargon, subscribe now. We post videos every week that help beginners avoid expensive mistakes and stay ahead of the people trying to manipulate the market. This isn't about fear, it's about power. And once you understand manipulation, you will never look at crypto the same way again. Crypto looks free, decentralized, open, but behind every chart there's an invisible war. Whales, funds, insiders, and they are not playing fair. In traditional markets, you have regulators. In crypto, you have code and people who know how to exploit it. Whales are individuals or groups with massive amounts of a coin. One whale can move the entire market. Here's how: they buy massive amounts quietly, price starts rising, retail sees it, fear of missing out in, then the whale dumps everything at the top. Price crashes. Retail is left holding the bag. This is called a pump and dump, and it's one of the oldest tricks in crypto. Think of it like a group of people rigging a flea market. They whisper, "This coin is going to the moon." Everyone buys. Then they sell everything at the peak. You are left with a coin that's now worthless. This isn't theory. People have lost entire life savings this way. One tweet, one coordinated buy, one fake announcement, and your portfolio can drop 50% in minutes. The scary part, you won't even know it was manipulation until it's too late. But pump and dumps are just the beginner trap. There's something even more dangerous, something that hides in the news, in social media, in your own fear. And that's where tactic number 2 comes in. It's called fear, uncertainty, doubt, and it's weaponized. Fear is powerful, but in crypto, fear is manufactured and it's sold to you like news. FUD stands for fear, uncertainty, doubt. In crypto, it's not just random panic, it's targeted. Here's how it works: a whale or group wants to buy cheap. They leak false or exaggerated negative news. Regulators are banning crypto. This exchange is backed. Retail panics, sells at the bottom. Whales buy everything at the discount. News turns positive again. Price rises. Whales profit. Meanwhile, you're left with nothing. Remember when a major exchange said it was backed, hacked, prices crashed, people sold. But days later, it turned out the hack was exaggerated or even fake. Price recovered. Whales who bought the panic. Massive profits. Retail lost everything. This is psychological warfare. Your brain is wired to avoid loss. So when fear hits, you sell exactly when they want you to. And the worst part, you will think you're making a smart decision, but you are just executing their plan. Fear is one weapon where but there's another, one that uses greed instead of fear. And it's the opposite of fear, uncertainty and doubt. And it's even more addictive. Next, I'll show you fear of missing out and how it's engineered to make you buy at the top. Greed is louder than fear, and in crypto, greed is manufactured on purpose. FOMO means fear of missing out. In crypto, it's not accidental, it's engineered. Here's the pattern: whales or teams start posting, "This coin is going to the moon." Influencers repeat it. Charts start rising. Retail sees it, thinks, "I'm missing out." They buy at the top. Whales dump. Price crashes. You didn't buy, but because you believed. You bought because you were scared to miss out. Imagine a line at a store. Someone says last one left. You rush, buy something you don't even need. That's fear of missing out. In crypto, it's the same, but with millions of dollars. Fear of missing out is addictive. It makes you feel like you are missing the biggest opportunity of your life. But the truth, you are missing nothing. You are just being used. And the scariest part, most people don't even realize they are in a fear of missing out trap until they are already stuck. Fear and greed, two sides of the same manipulation game. But there's a third tactic, one that's hidden in the data itself. Next, I'll show you how whales fake volume and wash trade, and how almost nobody notices this until they are already trapped. You think volume is real, you think liquidity is real, but in crypto, a lot of it is fake. Wash trading is when someone buys and sells the same asset to themselves, creating fake volume. Why? To make a coin look popular, to attract retail, to trick exchanges into listing it. Here's the cycle: whales or projects wash, trade on an exchange. Volume looks huge. Retail sees this coin is blowing up. They buy. Whales exit. Volume drops. Price crashes. You thought you were joining a real movement, but it was a mirror. Imagine a restaurant that's empty, but the owner pays people to walk in and out pretending it's busy. Real customers see the crowd and think this place must be great. They come in. Then the owner stops paying, the crowd disappears, the restaurant is empty again. That's wash trading. This is invisible. You won't see it on the surface, but it's stealing your edge. You are buying into a lie, and by the time you realize it, the whales are already gone. Fake volume is silent, but there's a manipulation tactic that's loud and uses the entire market as a stage. Next, I'll show you how coordinated market manipulation works and how entire coins can be rigged in hours. Crypto markets look random, but sometimes they are choreographed, coordinated. Rigging happens when groups work together: whales, influencers, Telegram groups, Twitter accounts. They agree on when to buy, when to hype, when to sell. The result: price spikes suddenly, social media explodes, retail fear of missing outs in, groups dump together, price crashes. It's not organic, it's a script. There was a coin that went from $0.01 to $0.5 in 6 hours. Twitter exploded. Telegram group screamed 100 times. Retail poured in. Then, in 30 minutes, it dropped back to 0.02. Everyone was stuck. It wasn't luck, it was a coordinated dump. This is the closest thing to a rigged casino. You are not playing against the market, you are playing against a group that wrote the rules. And when they decide to leave, you are the one left holding the bag. So far, we have seen pump and dump, fear, uncertainty, doubt, fear of missing out, wash trading, coordinated rigging. But there's one more tactic, the most dangerous one. It's the one that hides in your mind, your own mind. Next, I'll reveal the psychological trap that makes even smart investors fall and the exact defense system to stop it. The most powerful manipulation isn't on the chart, it's in your brain. Crypto manipulation works because of three psychological traps: confirmation bias, loss aversion, and social proof. Confirmation bias: you only see information that matches your hope. You ignore warnings. Loss aversion: you hold losing coins too long, hoping they will recover. You sell winners too early, fearing they'll drop. Social proof: you follow the crowd even when it's wrong. Manipulators take this, know this. They design traps that exploit these biases. Example: they post hype, you feel social proof. They post fear, uncertainty, doubt, you feel loss, aversion. They only show green charts, you feel confirmation bias. You think you are making decisions, but you are following a script. Here's how to break the trap. Never chase green candles. If a coin is already up 50% plus, you are late. Wait for the pullback. Set rules before you buy. Entry price, exit price, stop loss, no emotions. Ignore hype groups, Telegram, Twitter, Reddit. Hype is often manipulation. Do your own research. Track whales. Use tools to see big wallet movements. If whales are selling, don't follow. Question fear. When fear, uncertainty, doubt hits, check sources. Don't sell on a headline. This is your edge, not luck, not hype, not fear. Rules: once you follow this system, manipulation loses power. You stop being the target, you start being the player. Now you know the 6 most dangerous manipulation tactics and the defense system to stop them. But there's one final twist, one secret that most creators won't tell you. At 22:15 hours, that is almost at the end of this video, I promise to reveal the whale trap that destroys real portfolios. Let's break it down now. Here's the hidden secret. Whales don't just manipulate price, they manipulate your perception of time. They make you think, this is the moment, I have to act now. If I don't buy, I'll miss out. But the truth, there is no now. There's always another opportunity. The market will always move again. The real trap: acting too fast. The real win: waiting. Most people lose because they can't wait. Winners win because they can. Here's the biggest insight: manipulation isn't here to scare you, it's here to teach you. Every pump, every dump, Every fear, uncertainty, doubt headline, every fear of missing out post is a signal. It tells you where the whales are, when they are buying, when they are selling, when to wait, when to act. Once you see manipulation as a signal, you stop being the target, you start using it. That's the transformation from victim to player. And that's why you didn't lose money today. You gained an edge. Subscribe if you want to stay ahead in crypto without wasting years learning the hard way. We break down complex topics into simple, powerful lessons so you can stop manipulation, you can spot manipulation before it hurts you. This community is for people who want power, not fear. And if you are here, you are already one of them. But before you invest in any coin, watch this next video here. We are discussing remote income opportunities through crypto and how to earn without relying on price moves. This could save you from one of the biggest beginner mistakes in crypto. Thinking you only win when prices go up. Click right here and I'll see you there.